Hi to everyone, and welcome to the start of Soluna's new AMA series, where you, the viewers, and our followers on Twitter and LinkedIn can get your questions answered. I'm John Belizaire, CEO of Soluna Computing, and here with me today is Michael Toporek, CEO of Soluna Holdings. Thanks for joining me, Michael.
My pleasure, John.
So, we recently shared a question form on our social media at Soluna Holdings, and we invited all of you to drop all of your answers there. We are pleasantly surprised at the number and influx of questions that came in. And so today, Michael and I will answer the most common themes and questions we received over the last week or so. So let's jump in. The first set of questions that we got was around our future business. You know, we talk about going beyond crypto to batchable computing, HPC, and whatnot. And lots of the questions were about sort of how we intend to do that. So there's one question from Matias, and that question is, when is Soluna going to diversify into other batchable computing services? And by the way, both Michael and I are going to jump in and provide our perspectives on these questions. So Michael, I want to start with you. When is Soluna going to diversify into other batchable computing services, as Matias asked?
Sure. Matias, thanks for the great question. We've put out recently our plan for this year, and I expect that we will put together a 1 megawatt GPU facility this year where we will compose our product offering, our go-to-market strategy, and our business plan. And I would expect that around mid-year, we'd announce exactly how we plan to do all that. Our goal will most likely be to have one customer, a referenceable customer, by the end of the year. And I would call that our organic plan. But we're also looking for the right acquisitions where we can accelerate our efforts and at the same time add value. And so we're pursuing both paths because we view this as a critical component to the company's growth and the company's future. John, anything you want to add to that?
Yeah, I think that's right, Michael. We are looking at getting into the diversification as early as this year. We think that phase two of our business is so important. Here we talk about phase one and phase two. Phase one is crypto. Phase two is batchable compute, and the batchable computing market is growing very rapidly, and we want to get into that space as quickly as possible. So Michael's comment around starting with a smaller pilot facility where we can build out all of our capabilities, the software, the operations, and perfect that, and then scale it from there. That's the same strategy we use with our crypto business. If you folks have been following us for some time, we started out with our Washington facility, smaller, more focused, retrofitted it with a lot of our approaches, and then now we're scaling it at Sophie and Dorothy and beyond. And we're going to take the same strategy here with batchable computing. So thanks for that question, Matias. That was very helpful. There's another question from Jane, Michael. Jane asked, can you discuss how the cost structure of Soluna Batch Computing Services, the ones that you're building, will compare to Amazon Web Services, let's say in 5 years' time? Like, what is that going to look like? And there's more to the question, but that's sort of the essence of it. You want to take a stab at that,
I'm
Michael?
going to take an initial stab at it, and
Okay.
then I expect John to expand on that. But basically, AWS is offering a fundamentally different service than we would be offering.
Mm-hmm.
That's the starting point.
Right.
We're offering batchable computing
Mm-hmm.
that's geared at a certain type of application that's not always on, and that we're have what I call specialized equipment to handle. In addition, from a capital perspective, our facilities don't require nearly the capital required of an AWS facility. Remember, an AWS facility is always on, redundant to 5 or 6 or 7 nines. We don't have to do that because we have a network of computing centers we can move jobs around to. So our network's always up, and that's how we can provide service to our customers. That fundamental difference in capital cost creates a very different cost structure that we can pass on to our potential customers. And so that's where the edge comes from. John, from an operational perspective, they're also fundamentally different in that one's
Mhm.
more targeted and significantly less broad. And Amazon is built to handle everybody. The service we're offering will handle niche applications really well at a good cost structure. But John, go ahead. Why don't you kind of put a little bit more meat on those bones?
No, that was great. I would add that the way to think about the overall computing space, you have different types of compute loads. You have real-time compute loads. These are the compute loads that you run your business on, your ERP system, your e-commerce platform, and so forth. And that's why the big hyperscale companies like Amazon, Azure build hyper redundant systems because those systems cannot go down. But at the same time, you have other types of compute loads that are designed to be paused. They're more batchable in nature. They're jobs, if you will, and they're focused on very complex, high compute intensive applications. And what we want to do is, if you look at computing as like a pie or a cake, we want to take a slice out of that cake and build a whole company around making the batchable computing, the high performance computing aspect of that cake super optimized around our facilities. And we're going to build facilities purpose built for that market. And to Michael's point, that's going to create a much more improved cost structure, better than the other players, because we're not building a generic platform. We're building a very specialized platform. So that gives us cost advantages. It gives us technological advantages that will definitely position us well in the marketplace. Jane also asked whether we would sort of put some cost comparison things on the website, which you tend to see, like our compute costs X dollars per hour versus the competitor, and you probably will see stuff like that as we get closer to what the market would like to see from us and the products and so forth. So great questions from Matias and Jane. Thank you so much for sending those in. The next set of questions, Michael, focus on our differentiators. Like in my sort of software days, people used to call it what's your moat. What stops others from copying Soluna. And so the first question is from Chris. Chris asks, have you evaluated the risk of other companies copying your business model and improving it, and reaching better efficiency? And what are the conclusions from that research? You want to take that first, Michael?
Sure. I think that the most important thing that we do is that we very specifically position ourselves as a solutions provider to the energy generation sector. And we
Mm-hmm.
get very close to that sector, embed ourselves in their thinking, and provide them with a product or service to analyze the output of one of their facilities and how it's producing, and basically if there's curtailment and how they can monetize that curtailment. And then we provide them with a solution, so a diagnosis and a solution. I
Mm-hmm.
don't think others in the sector have productized um, this approach where we have a service, diagnosis, and a solution. I
Right.
mean, John's on the front lines of talking to all of these power producers and utilities about their problems and are diagnosing them. So I'm sure, John, you have some insight to offer there as well.
Absolutely. Yeah. We have done exactly that. There's a lot involved in doing what we do, right? Absorbing wasted renewable energy. You don't just show up and plug a battery in. There's actually lots of legal and financial structuring involved and regulatory issues that have to be solved. For what we've done is we've taken the time to go figure all of that out, and we've essentially packaged it up into a turnkey solution, if you will, for owners of these renewable assets. And what that has allowed us to do is to preempt a lot of the concerns or risks. These companies are backed by long-term capital, pension funds, et cetera. And so they're very risk averse, and they want a solution that is going to be helpful to them in the long run. And so by productizing it, we bring a lot of uniqueness to the marketplace. The other thing we're doing is, when we talk to asset owners, we don't just talk to them about one, asset that may be ailing. We really think strategically about how to become a partner for them across all of their assets, and that gives us a special position with them as we solve, the acute issues that they have with our product. We become a strategic partner for them as they look to new assets or go after new markets. And so that gives us access to long-term available, raw material, if you will, for this wasted energy to power our computing business. That's what differentiates us from other players that tend to be a bit opportunistic or going after specific individual projects. We're forming long-term relationships with global infrastructure and asset owners. So thanks, Chris, for that question. Fantastic. The other is around the source of capital. What are we doing to finance all of these projects? Our business is very capital intensive. And so, really thinking about how to approach capitalizing these assets is something that we get asked a lot. And how are we going to do that? So I want to share with you a question from John, not John Belizaire, John, someone who filled out our AMA form. And John's question is, what is your thought process when it comes to using excess free cash flow? Will you reinvest all of it back into Soluna, or will you buy back shares, or start issuing special dividends? What's your thought process on that, Michael?
Very simple. We are a shareholder friendly, returns focused company. And we've always been that way. Before I became CEO, I was on the board for several years. And for example, in March of 2019, we declared a special dividend, which was at that time about 40% of the equity value of the company. So
Mm-hmm.
we are extremely conscious of balancing uh, returns to shareholders and growth opportunities. I would anticipate that there, based on the opportunities we're seeing in front of us, I would not expect a dividend this year, and I would expect maybe some internal discussion next year. But we are just faced with so many tremendous growth opportunities. But it's important to balance growth and returns to shareholders. It's a constant dialogue that I would expect to have in the boardroom over time. And and one thing that we don't just talk about it, we've done it in the past. We've declared a special dividend that was shareholder friendly. No one prompted us to do that. We own insiders and management own over 30% of the company. So if the right thing is to declare a dividend, we're the recipients of 30% of that, which we don't have a problem with. So we're actually deciding, do we want to keep the earnings in the company, or do we want to put it in our pocket for 30% of that? And so that, I think, that alignment of interests, I think, really helps us make a good decision for shareholders.
Yeah, that is a core principle that we have, aligning our interests with our shareholders. And I agree that, as we look at opportunities, if we see opportunities that can continue to grow and increase the value of the company, I'm sure shareholders would agree that it's a good, use of that capital. Let's go to Zach. Zach asks, can you give further insight into how CapEx will be funded for the upcoming quarters? And why don't you start with answering that question, Michael?
Zach, that was probably the most popular question that we've received. So I'd like to really give it some time, and John's free to comment on it as well. But um, we are very fortunate in that we have many levers to push in terms of how we choose to raise capital.
Right.
I think part of that is because of the creativity of the team and how we put together our company. So we can raise capital at corporate. Obviously, there's common stock, which we've done in a very parsimonious and intelligent basis. For example, when we first began on this endeavor, I think our market cap was 10 to 15 million, and we've raised over $60 million. We've done that carefully, and I think we've achieved some very significant appreciation in our share price. And that matters to all of us because, in the end, we live on appreciation of the share price. That's what puts money in our pockets because of the alignment of interests that we have. So then we have preferred stock, which I think is a fairly unique instrument in this business. I believe we are the only one in our business with a publicly traded preferred stock. That's a very important vehicle to raising non dilutive capital that's very flexible for our common shareholders. Third, there's corporate debt. And then there's an entire different capital structure. It's just at the project level where we've got equipment financing, project debt, and project equity. And John has been especially successful at getting commitments from project equity partners, where I've gone over approximate terms where they we're pari passu investors. The investor then gets its capital back, our hurdle rate, and then we participate 50-50 on the return of that capital. That's very attractive to us as we scale up and monetize our intellectual property. That's what we do. So, in the end, when you think about what differentiates us, it's the alignment of interests, meaning you've trusted us so far to capitalize ourselves intelligently and prudently. We've done that. We expect to continue to do that. But at the same time, I think the other differentiating factor is we're looking to monetize our intellectual property. And to do that, we have to leverage the ability to finance our pipeline. So if we're able to figure out a great way to solve an energy problem at a particular site, and we're able to put together the capital to do that, that involves, say, a 10 or 20% investment on our behalf and 80% third party equity. That's look at the return on invested capital there. It's the brains of the people at the company, some of our capital, and then the capital of other return on other people's money. That's a pretty good business. And so we're scaling that up. And I would expect to see announcements from us over the coming months on project equity, on additional equity, additional financing up at corporate. And so I think you'll see some very interesting discussions come to fruition that minimize any potential dilution to common holders and really capitalize our company in a prudent, intelligent fashion that balances all the interests. And remember, the entire team making these decisions are very aligned with the common shareholders. John, as you can tell, this matters to me a lot, and so sorry to
Yeah,
speak so
I,
definitively about it, but it's what I think about all the time.
that's fantastic. I mean, certainly the passion is well received. Capitalizing our projects is an important part of what we do, and what I'm excited about is that we've created a very flexible platform for doing so. As Michael pointed out, we can raise capital at through the public equity markets, which is permanent capital sources that we can bring in through different structures, and we have different vehicles for doing that, all very very aligned to maximizing shareholder value. And then we have the ability to do it at a project level where we can bring in, debt and equity that's non-dilutive but very project specific, and we bring in investors that have a strategic interest in supporting the proliferation of this type of new infrastructure technology, if you will, to improve the grid, to make more renewables come online. And we're starting to get into conversations with some of these top players. And as I said, the partners that we're actually partnering up with as well are also potential capital partners for us. And so that flexibility gives us lots of options for, uh, you know, building out this plan and building out these projects. And we can already see the pipeline and the roadmap for that taking place. So it's very exciting to see. Thanks for that, Michael, and thanks for your passion, which actually leads us into the next set of questions, which is why don't we hodl? David is, one person who asked a question very similar to Nancy, but I'm going to ask Nancy's question first. She asked, how does selling BTC work in your favor rather than hodling, treasurying BTC while prices are cheap and then selling them later, like some of the other players in the market do? Comments on that, Michael?
Yeah, I mean, look, I come from a place where I'm very focused on investor efficiency from allocation of capital. And
Mm-hmm.
so if you decide that you'd like to own us for you got a $10,000 portfolio, you want to put 5,000 on us and 5,000 on BTC,
Right.
great. Call Coinbase and now half your portfolio is BTC. Another
Right.
person would say, I want to put of my $10,000, I want to put 8,000 on you guys, 2,000 on BTC. Another person might say, I want to put 8 on BTC, 2,000 on you guys. What's the right ratio for my HODL? How much should I put on my balance sheet? How much BTC exposure do you want? I let you decide for yourself. You open up a
Right.
Coinbase account, you get as much BTC exposure as you like, which you can tamp up or down any day, depending on your risk tolerance that day. And if you like the way we deploy capital, and if you like the way we monetize into our intellectual property to generate, Bitcoin and other compute assets, great. You can tamp us up and down either as well. So it's extremely efficient for you on your own to actually decide what proportion of coin risk you want to hold in your portfolio and what I'll call operating risk you want to hold in your portfolio. Why do
Right.
you want me making that decision for you? So that's my point of view.
Yeah.
Others are free to debate it, and there are other legitimate points, but that's how I come at it.
Yeah, I mean, I'm with you on that. I mean, we're building an operating company. You're investing in us because we're building a business model that's going to be around for the long term that generates cash flows over a long period of time. And we're doing that by developing a diversified business that isn't just crypto in the long run. That's designed around solving a very large global problem, and it's really hard to solve that problem. And when we solve that hard problem and we deliver on that solution in a consistent way over the long run, that will generate a lot of revenue, and we want to use that revenue to reinvest or grow the company, etc. And so you're really investing in us as a problem solutions company. we You're not investing in us because you want exposure to Bitcoin. There's other ways to do that, and Bitcoin is one of the computing things that we do. And so when we generate the asset, we put it into the marketplace where people can get access to it. We're not keeping it on our balance sheet because that's not the fundamental purpose of the company. The fundamental purpose of the company is to increase the penetration of renewable energy in the world, and we're doing that across these different computing fabrics. And Bitcoin and other crypto is one way to do that. So that's the way to look at our business, and that's why we don't hodl, because it's a capital allocation problem, and it's a risk allocation problem, to Michael's point. And we think you should be making that decision, not us.
I guess, look at it from the investor perspective. The other, from a corporate perspective, our income statement right now depends on, to some extent, on the price of Bitcoin. Why
Right.
we want our balance sheet health to depend on the price of Bitcoin too. So it doesn't make any sense from a corporate finance perspective to do
Right.
that from a company perspective.
Yeah.
Some people will disagree. Some people
Right.
that have more money than me can disagree with that. It's
Right.
just,
Right.
in the long term, we'll see how it works out.
I think the basis, the fundamental basis or the reason for the question is that people who are generating Bitcoin or in the process of mining really see the asset as a long term asset, and it will have massive amounts of value in the long run, and so they're holding on to the asset as a way to um, generate increased value
But,
in the balance sheet
you
because of
know,
the appreciation
but John,
over the long run.
I'll give you my comeback to that. Do gold mining companies hold on to their gold?
Yeah, that was going to be my. That was you
Do
you
oil
you
companies
you got there
put out a
before I
bunch of
did.
oil and just keep
Yeah,
it, say, it's going to
right,
go
right,
up in value, I'm not selling this?
right.
No.
They basically deliver it to the broader ecosystem that then continues to monetize around that asset and create lots and lots of value. Instead, what they do is they just become really, really good at mining gold, or really, really
Right.
good at finding oil, and they perfect the IP and technology and distribution and everything to be really good at that. And that's why you invest in them, because they're so good at it. They do it well, and they're able to deliver the asset. We're essentially similar, right? We're creating a new way to generate computing resources that are very low cost, that are green, that can be delivered on a global basis. And as part of that, we generate this digital asset as well that can be put into the ecosystem and made available to the marketplace. And so that's the way to think about us as well. I think that's it for today. We had some great questions in here. Look, if we didn't get to your question, it's probably because your question was similar to some of the thematic questions that were asked. We will be in touch with every one of you, and thank you, and reach out, and we may give you access to some exclusive content for participating in the AMA. And if you didn't get your question in this time, we're going to do this again next month, and we're going to keep doing this for a while. I think it's fun. I hope you enjoyed it, Michael, and we'll see
I'm
you.
trying, John. This is my
We'll,
first one. I'm trying. John's much more
yeah,
experienced at this
yeah.
podcast
So
than I.
Michael, for everybody's benefit, this is Michael's first AMA. Had to get him into the mix here, but I think it'll be fun as we keep progressing. It'll also be great to share with folks, updates on some of the questions that were asked as we progress. So
Absolutely.
look forward to hearing more from folks. Please ask them again, and we'll drop another one of these AMA forums in our social networks in the coming month. And we look forward to answering more of your questions in the next AMA installment. And for those of you who had energy and compute specific questions, stay tuned for a chat with the rest of Soluna's leadership team. We're going to be commenting on our perspective on those too, and we'll be answering those questions as well. If you're watching this and haven't had a chance to ask your question, look, it's not too late. Definitely resubmit it and visit the link in the description box or drop your questions on Twitter. We're at Soluna Holdings to have your questions answered in our next installment. And if your questions weren't answered here, just be sure to subscribe to our newsletter as well. It's in the link below, and we're answering questions there every week. Until next time, we'll see you later.